What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leverage bullish semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit that subscribe button. That way, you're notified whenever we release our videos. We release videos Monday through Thursday and once on the weekend. We do release bonus content from time to time as well, so make sure you're alerted for those. Today's gonna be a little quicker one. I've got to catch a flight here actually in a couple hours, so I've got to get out of here. But I do wanted to go over everything for Friday. You know, we've got Friday trading coming up. A lot of people like to use zero DTEs, and just wanted to make sure you knew what the market maker's expected move was and the triggers and targets for tomorrow. So just getting into our agenda for today, we'll do a quick recap of today's price action. We'll do a wide view as we normally do. Then we'll look at the market maker's expected move and set our triggers and targets. So just getting into the charts, looking at today's intraday action sideways. The moves have been overnight, so our swings have been doing all right. But even with that, we're getting real muted movement throughout the day, which is a little strange for SOXL with it being such a high beta ETF. But we do go through those periods of consolidation. So I mean, everybody does. Every ticker symbol does. So that's just what we're going through right now. We can see that. Oops, let's get the right today. There we go. So if we look at today, we had the gap up over yesterday's price action. So we've got our 4-hour markers here with the overnight high, opening print, previous high a day. Then down here, we've got our 4-hour trigger to the upside, overnight low, and previous low a day. So obviously, we weren't dealing with those levels below previous high a day. We just had to basically navigate, opening print the whole day. It did hold as support, so it does lend itself to be a little bit more of bullish consolidation. But unless you were scalping something really short, there wasn't a whole lot to be had here. I mean, you could have stacked up on contracts and, taken like this small move here or that drop there. But for the most part, we just found support off of opening print and overnight high. It did create a 1-hour downtrend line here through today. But just like yesterday, we gapped up and we hit this daily broadening formation, right? And then went sideways. That's the same thing we did today. We gapped up, hit this broadening formation. Oops, let's get that out of there. That's a little confusing. We gapped up, hit the daily broadening formation, and just moved sideways. So you can see we've got a 15-minute broadening formation that did form in the second half of the day, but we're dealing with the 1-hour downtrend. We've already broke the 15-minute downtrend, so we're just dealing with the broadening formation. So we're looking to break this, see the high of this 15-minute broadening formation, which does coincide with the last month's high, and then just above it is that daily broadening formation. So looking to probably see more resistance again around $29.66 to that $30 level. Just looking at things from the internals perspective, it basically showed the same thing. Yes, there was money flowing in. Vol QD shows we were easily in trend higher zone by the early morning, and breadth was elevated, but SOXL surely trailed behind the Qs, right? So yesterday we saw the inverse, right? It was SOXL outperforming the Qs because breadth was low, meaning money wasn't being spread to everything in QQQ. Money was basically all going to chips yesterday in QQQ. Today we've got the inverse, where the money is being spread out, so it's not so concentrated in chips, and we see that sideways action. So again, not making any trades off of the internals, but just keeping them in mind, using them as another tool in our toolbox. Let's go ahead and get back to this chart. Let's look at the day. If you're not familiar with some of the lines on our chart, make sure to check out our bonus content and our charting videos. We've got 2 of them out there. One for just basic charting, which shows you, all the broadening how we use broadening formations and these major levels like the year flip, quarter flip, month flip. But we've also got a precision trading video as well, which is more geared towards the intraday scalping and day trading. But anyways, we can see that we're above the market maker's expected move high for the week. That's this purple dash line. I went ahead and marked out the market maker's expected move high for tomorrow, and as well as the low. So we've got market makers expect the price to be somewhere between $30.20 and $28.14. So again, we're at the top of this range that we've been in for 11, 12 weeks now. Just like the last, not the last time we were there, but the time before, we've got a second green day above that 28.13 level, which is the year flip. So we've got the day, the week, the month, the quarter, and the year green. But we've got to watch out for tomorrow being a down day, just like it did here, and which brought us back down to the bottom of the range. So if that happens, we go ahead and get out of the calls that we've got for October. We start selling calls and then buying puts, and giving ourselves time on our contracts, our put contracts. That way we can let it get back to the bottom. But there's gaps to fill below. There's a gap from last night as well. I haven't put that on the chart, but if we put this here, we can see that we've got a gap on the day as well. Oops. Right, so we'll just stretch this out to 27 so it's visible. All right, so we've got a gap there, gap below there. We could always come back within that range, even bounce off the middle of the range to go back up for our support. But we've got to watch for that turn back down. It's been happening pretty much every time we get up here at this 28.13. Could this be different? Maybe we get the pullback and then support off of 28.13 and get a bounce. But we just got to keep an eye out for it. All right, so the week. Oops, we'll take a look at the week as well, just to be consistent. Oops, that's what we're looking for. There we go. So again, we triggered the 2 down, 2 up. We've reached magnitude, so it's perfectly reasonable to expect price to pull back down within, that it's reached that magnitude. At the same time, there is one more higher high to try and get from a week perspective out of this range. So we could shoot for that, possibly go up, hit this weekly broadening formation, get a rejection. But we're just kind of trying to, be nimble, be able to play either way while we're at the top of this 11-week range that we've been in. Once we put in support, then we can start looking at going longer as we continue to push up. But we haven't found that support above the 28.13. So until we get that, we've got to keep the pullback in mind back to the bottom of the range. I won't go over the week, the month, the quarter, and the year. We know what we're looking like from that perspective, and most people are here for triggers and targets for tomorrow anyway. So let me go ahead and get into it. Just looking at tomorrow intraday, we've got our levels marked out here. Previous high a day, which was today's high. Previous low a day, overnight low, overnight high. Those are our major 4-hour levels, but we've also got the 4-hour trigger to the downside and the upside. Those are points of inflection, so you do want to keep those in mind. So again, let's say, let's bring this out. Let's say we get an opening print, right here. We open tomorrow here, and we start pressing up. We get a little bit of pullback, and then we get a higher low. We're going to go ahead and enter calls above opening print with higher lows above opening print. We enter calls. Watching out for this inflection point here, the 4-hour trigger to the upside, but we should push through it because it is the trigger to the upside. And then we're targeting the previous high a day. Now, overnight high by the time we open tomorrow may be above or below previous high a day, so that is going to be a target as well. If it's below previous high a day, then we're just targeting overnight high first and then previous high a day. The same to the downside. If we open here, we get a push down, we pull back up, and we get a lower high underneath opening print, we're entering puts. First looking for that overnight low, then previous low a day. Again, if overnight low goes below previous low a day, overnight, then we'll adjust that in the morning, and then the first target will be previous low a day, and the second target will be overnight low because it would be lower. But that's just how we play it, right? That's high percentage, repeatable, proven strategy that you can use to scalp, right? So there you go for the 0-day traders. Let's go ahead and get back out here for some of the other folks. All right, so just looking at the 4-hour time frame. And again, the base of our trading and charting method is rooted in the strat. So we've got a 2-1, meaning we can have a reversal to either side. We can tomorrow we can have a 2-1, 2 down, or a 2-1, 2 up, which either way is a reversal. But the good thing about reversals is they give us not only a clear entry but a clear exit, right? So if price goes below the low of the second 4-hour candle of today, we're targeting today's low. So not a lot of magnitude there, but it does bring you to that little gap that we've got here. And further, the market makers expected move for the week, the high was here. So do we pull back within that range before the day closes? Possibly, right? To the upside, we've got if the price action in the first 4 hours of tomorrow goes above the high of the second 4 hour candle of today, we're entering calls and we're targeting the high of today. Again, not a lot of magnitude, and that 2966 is looming as a resistance level, so we may not get through it, but if we do, looking to ride this daily broadening formation, looking for the expected move high of 3020. Extended targets, if you're familiar with this channel, we know that 3055 level is the 61.8 fib of the 2020 low to all-time high. The 61.8 retracement is that 3055, so that would be probably our next target there. I'm not sure if we would get very much further tomorrow, but if we have an explosive day, then we've got the weekly broadening formation up here that will probably act as resistance. So we've got our triggers and targets to the downside. Let's go ahead and go over them on the notes. Again, the week, we know what the week flips, the week, month, quarter, and year flip are, right? We're full time frame continuity green, so to flip red, they would have to go below these prices. Tomorrow, there will be 74 trading days left in the year, and we closed at 29.17 today. So with the market makers expected move of 103, if we go back over here to our options chain, we can see that there is an 87% chance that price will go either up $1.03 or down $1.03 from what today closed at. So we can see in our notes we've got 30.20 as the high of that range and 28.14 for the market makers expected move. We know where we've got our gaps above. We got to fill in that gap below that we just left from today, but otherwise we've got other gaps below. And then on the 4 hour, if we trigger the 2 down, that triggers at 29.03. Again, magnitude is only 28.97, but we've got extended targets of 28.83, 28.64, and 28.14. If we're breaking to the upside, that gives us a 2 up, triggering at 29.43, magnitude of 29.66. So not a lot of magnitude there, but we do have the extended target of the market makers expected move high here at 30.20, and the 61.8 fib that we have from 2020 low to to all-time high at 30.55. Right, so those are our triggers and targets for the 4 hour. Let's look at the day. We did get a green day. Oh, come on, Thinkorswim. We got a green day, but it was kind of an inverted hammer there. So got to kind of look out for downward action tomorrow. If we do trigger to the downside, if price goes below today's low, which is 28.97, we're targeting the low of yesterday for the 2 up, 2 down. Again, triggering a very clear entry here, very clear exit here. Those are reversals. So the exit would be 28.07. That does, pretty much coincide with the market maker's expected move low. But if we do break below that, we've got the gap below as well that we can fill. Maybe even just go half gap if we don't fill it all the way. So to the upside, we would have just a continuation pattern, not a reversal, right? So it'd be 2 up, 2 up. First target being this 30.20. Which is market makes expected move high, then that 30.55, and then the 32.64, all right, which is a higher high on the week's perspective. Okay, so those are our triggers and targets for the day tomorrow. I've already given you the breakdown for your intraday scalping and day trading. The week, we are still in force with a 2 down, 2 up. Magnitude was 29.11, so let's go ahead and straight through. So we reached this magnitude, right? We've not reached the extended targets, but again, because we've reached this magnitude, we can expect pullback, right? The strat has been fulfilled. That's all that needs to happen. After it's fulfilled, then we see how price action continues to go, and if it continues up, then we enter and we use our triggers and targets to the upside. If it reverses, then we just get back into the downside. The month, we're very close to triggering that 2 up at 29.66, but we're still inside. So 2 down would trigger at 22.57. We'd have to drop pretty hard tomorrow to do that. And then the 2 up is 29.66, which shouldn't be too hard to do. What we do want to look out for on the month is if we do trigger, what am I doing here? Yeah. If we trigger the 2 up, that can leave the door open for a 2 up, 2 down reversal next week. So we just want to watch. If it triggers 2 up, we push up in the morning and it pulls back at the end of the day, maybe we start the re why am I blanking? We start the pullback back to the bottom of the range there at 24. Sorry, couldn't think of any words right here. Again, trying to rush through this a little bit, as you can see, but we've got to keep that in mind. We've got still a long ways to go on the magnitude for the month, but for the week, we could be setting up a reversal. So just want to see how tomorrow finishes and how much momentum there may be to the downside. Even if we don't get that push up tomorrow, if we just push straight down, that kind of brings it more on the table. A 3-1-2 down, but we would have to hit that 29.66 to actually trigger the 2 up on the month. I'm sorry. And then for the quarter, again, we're handily 2 down, 2 up, triggered at 25.84. We're definitely above there, so not much to talk about there. The year, we're back green. I need to change that to green, but we're back green, so we're just looking for further movement upside for to finish the year out as a failed 2 down instead of that clear 2 down, giving us more momentum moving into tomorrow. So there it is, your triggers and targets for Friday. Don't forget your market maker's expected move range. It's not an end-all be-all. If we go up, price won't just stop at 30.20, but it's a point of inflection, right? It's where the highest probability there's a high probability of a turnaround at that point. So right, a big point of inflection. So just keep that in mind, and going into your trading tomorrow, get you some good rest tonight. Wake up refreshed. I will be trading a little bit in the morning, but I've got some stuff to do during the day, so won't be on X quite as much as we normally are. So if you are looking for us on X, that's why we'll be a little bit more absent than usual. But we will try and put together a weekend video as well, so everybody has that. I'll still be out of town on Monday, so be light trading Monday as well, but I'll be back fully in action on Tuesday of next week. So again, I hope everybody liked this video. It's a little bit quicker. Didn't do quite as much detail as I usually do, but if you like the video, give it a thumbs up. Help the channel grow a little bit. That's all we ask. We're not selling anything here. We're just trying to deliver a little bit of free education, right? Expose some people to the strat, expose some people to SOXL if they're not already exposed to it, right? Neither one of them are new. The strat's not new. SOXL is not new. So there's people out there already trading it, using these methods. But if I can help someone else out there, that's all I'm really looking to do. So again, enjoy the rest of your night, and we'll see you out there trading tomorrow.